You have to know it. This is just more like workings that you also need to understand. For you to be able to see that we made a profit or a loss on disposal of an asset, you need to take the difference between the carrying value and what and the selling price. That's when you will know if the selling price is greater than the carrying value, we made a profit. But if the selling price is less than the carrying value, then we made a loss. So in this situation, there is a loss on disposal of how much? We made a loss of 7,875. That's what we calculated from yesterday. So obviously a loss will be an expense. So I can maybe just, what can I remove here? Let me just remove this water and electricity and say loss on disposal, right? On disposal of vehicle. It was the vehicle that we disposed, and it was calculated as what? As 7,875. Okay, another thing that we got from this calculation, we calculated a depreciation of a vehicle that was sold, and we got the 11,750. I think this was the depreciation. Okay, fine. Maybe now we need to go back and carry on with the with the transaction. From these 7 and 8, we must not forget that we need to calculate what? We need to calculate depreciation. That will be recorded in the income statement. But depreciation of a sold vehicle, we did calculate that one. A depreciation of what? Of a sold vehicle. Let me just say here, number 4. Just gonna say number 4 here, and we're just gonna do the workings for depreciation. Okay, depreciation of sold vehicle. Now we need to calculate the depreciation of an unsold. Yeah? Yes. Okay. So when we're dealing with the unsold vehicle, how are we going to start that one? Because we also need to calculate one. Let's go back to the transaction. So transaction number 7, what did they say there? They said a vehicle was sold for cash, 45,000 rands on 28 February 2014, right? The fixed asset register revealed the following regarding this vehicle. We have a cost of 117,500, accumulated depreciation on 1 July 2013. That's 52,875. This transaction has not yet been recorded by the bookkeeper. So that's what we found about this one. So then they said provide for depreciation as follows: on vehicles 15% per annum on cost. So we're calculating it on cost price. We said another way, if they don't want to say on cost price, what they're going to say for our depreciation.
Straight line.
Exactly. They will say straight line method, right? Depreciation is calculated on at 15% on a straight line method. That they can say cost price, they can say on a straight line method. On equipment, 10% per annum on diminishing balance method. I did say here they can say on carrying value, on reducing balance. Okay, then they say note, new equipment costing 24,000 rands was purchased on 1 September 2013. This has been properly recorded. Let's deal with the vehicles first, right? Now that we calculated a depreciation for the new vehicle, now we need to deal with the old one, yeah? The sold, now we need to deal with the one that is unsold, yeah? Okay, so how are we going to work on that one? The unsold vehicles.
We're going to go to the trial balance.
Let's go to the trial balance, yes, okay.
We're gonna look at vehicles, and then we're gonna subtract the vehicle that we sold from the 407,000.
Yes, why are we subtracting it?
Because you already calculated the depreciation for the sold vehicle.
Exactly, that's correct. But this is another line that is important also, right? This transaction has not yet been recorded by the bookkeeper. The reason why we're subtracting these 117,500, or the reason why we're subtracting the cost of the vehicle that was sold, is because it has not been recorded, which means it has not been removed from this cost price. Né? that is sitting on the trial balance. When they say the transaction has not yet been recorded, which means it has not been removed from these 407,000. Yeah? Yes, very good. So which means now we're going to say 407,000 minus 407,000 minus the cost of the sold vehicle, right? How much is the cost of the sold vehicle from our transactions?
117,500.
Exactly 117,500. So I'm going to say minus 117,500, and how much are we getting?
289,500.
289,500 rand, yes. And then what do we do after this one?
We multiply by 15%.
Going to multiply by 15%, yeah? So I'll say times 15%, and then how much am I going to, do I have to apportion this one?
No.
Yes, we don't have to, and the reason for that?
It's because we had the asset for the whole year.
Exactly, very good. We have the assets for the whole year. So how much is our depreciation that we're going to get here?
43,425.
43,425. That is going to be our depreciation, right? 43,425. Very good. Okay. So which means now we are sorted with depreciation. So the total depreciation for vehicles, let me just say total depreciation for vehicles. So it's going to be, I'll say here is equal to, going to add the two, right? Which is 11,750. So 11,000. Hello, can you hear me?
Yeah, now I can.
Okay, sorry about that, man. I think I got lost. My network is a big problem this side, but you can hear me clearly now, no?
Yeah.
Okay, we're saying we're adding the two amounts. How much are we getting for our total depreciation? How much are we getting if we're adding the two amounts?
55,175.
Yes, exactly. 55,175. So which means now we are sorted. We do have depreciation for vehicles. Now we can go to the equipment. So on the equipment side, what is going to happen there? They told us that on equipment, 10% per annum on diminishing balance method, right? And then they said, note, new equipment costing 24,000 was purchased on 1 September 2013. This has been properly recorded, right? Which means the depreciation has been, the purchase, which is costing 24,000, has been properly recorded. Let's do the calculation for this one. How are we going to do? We need to start with the new one, right?
Yeah.
Always we start with the new vehicle or we start with the sold vehicle. So how are we going to do this one, Gary?
We're going to say 24,000 since it's a new vehicle. We don't have to subtract the depreciation.
Exactly. Very good on that. So we're going to say 24,000. So I'll say depreciation here. And then I say new. So I need to say 24,000, right?
Yeah.
Because there's no depreciation to subtract, it's new, then what must I do?
You multiply by 10%.
Multiply by 10%, yes, very good. Do I have to apportion this one? Do I have to apportion it?
Yes, I'm counting the months.
Yes, yes, yes.
10 months.
It's going to be 10 months, right? Yes, very good on that. It's going to be 10 months. So I'm just going to say 24,000 multiplied by 10%, right? 10%, and then multiply by 10 over 12, né?
Mm.
Yes, 10 over 12, because we started from which month? We started from 1 September. So it's going to be September, October, November, December, January, February, March, April, May, June. That is going to be 10 months. So how much are we getting as a depreciation?
2,000.
We're getting 2,000 rands. Very good. 2,000 rands. Okay, that is our depreciation for the new vehicle that was purchased, right? And then now depreciation for old now, right? We need to calculate what? Depreciation for the old vehicle. Oh, sorry, it's an old equipment actually, not vehicle. I'll just say old. Okay, so for this one, how are we going to deal with it? Because what they said here, this purchase of 24,000, they said new equipment costing 24,000 was purchased on 1 September. This has been properly recorded. So what do we do now in terms of calculating depreciation for the old equipment?
Since it has been recorded, I think we should subtract the 24,000 because you'll be counting it double.
Very good, very good. From this cost of 308,000, right? We need to first subtract the 24,000, the new equipment, because it has already been included in this amount, né?
Mm.
So we're going to say 308,000 minus 24,000. That is our starting point. 308,000 minus 24,000. And then what do we do after that?
We multiply it by 10%.
Multiply it by 10%. Why are we doing that?
Because it's, we have to subtract the
Well, to subtract what?
accumulated depreciation.
Exactly, yes, because it's on diminishing balance method. Yeah? Before I multiply with 10%, I need to subtract the accumulated depreciation also, which is going to be how much? 170,500 rands, yeah? Which is going to be 170,500 rands. That is the depreciation for the equipment. So I need to say here minus 170. Am I right? 170, 500, and then how much are we going to get? How much am I going to get here?
113,500.
113,500. Okay. Yes, 113,500. And then I multiply it by how many percent? 10%. No?
Yeah.
Yes. Then we say multiply by 10%. And then do we have to apportion this one?
No.
Yes, because it's an old one. We don't have two. Yes, you are correct. Then how much is our depreciation?
11,350.
It's 11,310, 350. It's 11,350. That is a depreciation for the old equipment. So now if I calculate my total depreciation, what am I going to get? So I will say, yes, 11,000 plus 2,000, eh?
Yeah.
Yes, and then how much are we getting?
13,350.
Equal to 13,350, right?
Yeah.
Yes, 13,350. So that is my depreciation for the total depreciation for equipment. Then you have done your calculations now, 100% correct. Thank you for that. The only thing you need to do now, we need to go to the income statement and record what? And record our depreciation in the income statement. So we're going to add the two amounts here. We're going to say the first one, it was 55,175. 55,175 plus 13, right? Plus 13, 350, which is the depreciation for 13,350, which is a depreciation for the 55,175 plus 13,350. And then how much are we going to get? Is the total depreciation.
Um, 67,525.
67.
Yeah, let me double check.
I'm getting 58.
I put 42 instead of 43.
Oh, okay. Not really. It's supposed to be 55. Isn't it supposed to be 55?
No, I didn't put the other total down. I had to calculate from 11,750.
Oh,
Yeah.
okay. No problem. Then so how much are we getting?
68,525.
68,525. Very good. 68,525. That is our depreciation. Okay. Well done on your calculation. So what we need to do now, because we have dealt with all the fixed asset transaction, I want us to go straight to the fixed asset, the fixed asset note first before we even carry on with our transaction, because I want you to be like extra good on this note, please. Now, I want you to master this note. Every time you're dealing with fixed assets, you must do this note, even if they didn't ask you the fixed assets, because the more you practice it, the more you will understand it. And fixed assets will be key for most of the topics that we're going to do. It will always be included somewhere, somehow. Income statement, balance sheet, it will be there. Even like when we're doing fixed assets separately, it will be there. So cash flow statement, it will be there. So I want you to master this thing now.
Yeah.
Because it is the heart of accounting. That's what I can say. Let's see here what is our starting point. I'm just gonna take these calculations. I'm just gonna take this calculation and then put it down there. I'll just put it somewhere here by our note. Okay. So so now what we're going to do, because we do have depreciation for the two, right? Can we plot it in here?
Mm-hmm.
Yes, I have a depreciation for vehicles. How much is it? It's 55,175, nah? That is the total depreciation. That one is for it. This is for vehicles. And then the one for equipment, how much do we have?
13,350.
Yes, 13,350. That is depreciation for the equipment. Obviously for land, For land, it will be 0 because land and buildings, we're saying there's no depreciation, and then there will be a total for this, which is going to give us how much? 68,525. This 68,525 should always be the same with the depreciation that is sitting in the income statement, just like this amount that we have recorded here. Can you see this?
Yeah.
It should always be the same. This is to show that there is a relationship between the note with the income statement. There is a relationship between this note and the balance sheet. Even the cash flow statement, there is a relationship between this note and the cash flow statement when it comes to additions, when it comes to disposals. We'll talk about that when we're doing the cash flow statements. Okay, what else can we do here? We have a disposal, ne? We have a disposal. For vehicles, which one we disposed? We didn't dispose anything under equipment, but we know that we disposed a vehicle. So how much was the carrying value of that disposal? Because here we need to record the carrying value, right? The reason why we're saying less disposal at carrying value is because I need a carrying amount of the vehicle disposed. So we need to go to the asset disposal account and get the carrying value. So how much was the carrying value at the date of disposal? Here, if you look here, how much we have. We did calculate it here. We got 52, yeah? Yes, we got this 52,875. But if you want to calculate it using the asset disposal, what you're going to do, you're going to take the cost price, which is 117,500 minus this accumulated depreciation. You will still getting the 52,875. Can you see that?
Yeah.
Yes, so we're going to 52,875. That is going to be a disposal at carrying value for vehicles minus 52,875. Okay. Was there disposal under land and buildings? Definitely there was nothing here. Then I can get a total of this again, which is going to be 52,875, right? Was there any additions on the buildings? There was no additions on the buildings, no? Yes. On the vehicles, did we buy anything?
No.
What did we buy here between vehicles and equipment? We only purchased an equipment, no?
Yeah.
So under vehicles, there will be nothing. So I'm going to say 0 here. And then under equipment, how much am I going to record here?
24,000.
24,000, yes, very good. Additions at cost, it means that I need the cost of the asset that I have purchased, so which is going to be 24,000 rands, yes. And then from these 24,000 rands, I'm getting the total, which is going to be how much? It will be 24,000 rands. Okay. Then now we can go to a trial balance now, yeah? Now we can go to the trial balance, okay? I'll go to the trial balance and say the first ones we have land and buildings. We can just deal with land and buildings and finish, né? Because there's nothing else for land and buildings. So I have 2,048,500, which is going to be my cost price, 2,048,500, and then minus 0 is my accumulated depreciation, yeah? And then which is going to be this minus this on my cost. I'll still, on my carrying value at the beginning, I'll still get the same amount. And then there's nothing here, which means I'm still going to have the same cost at the end. 2,048,500 minus 0 as the accumulated depreciation. And then here I'm going to get this minus 0. I'm still having the 2,048,500. Why did we say there should be no depreciation here? Why are we not depreciating the land and buildings? What did I say before on that other day?
But buildings do, and we don't know which percent buildings is depreciating by.
Yes, exactly. Buildings, they do depreciate, But the real reason why we're not depreciating land and building is because included in that amount there's land. Land does not depreciate. We know that and we agree. Instead, it appreciates. But since now there is land, we're not going to depreciate it because we cannot split the two amounts, and we don't know which one relate to the building and which one relate to the land. So as a result of that, you're gonna keep it at the original cost price. Leave it like that. Vehicles. Let's go and deal with vehicles. The cost at the beginning for vehicles were 47,000 here. Can you see? 107,000 rand is the cost price. Anything that we need, is this the cost at the end or the cost at the beginning? What is going to direct us about that?
That the transaction has not been recorded.
Has not yet been recorded. So we sold something for 45,000, which has a cost of 117,000, and it was not recorded. So which means it's still included in that amount, né? So which means that is the cost at the beginning or cost at the end. That's one that is sitting in the trial balance.
Cost at the beginning.
Exactly. It has to be the cost at the beginning. So let's go and see how much we have there. How much is that? That is 407,000 rands, né? So which means here under cost, I'm going to have 407,000 rands. Less accumulated depreciation at the beginning, they gave us, which is 147,400, né? But this is for vehicles and 170,500 for equipment. So we can record both of them here. 147,400. 147,400. This is for what? This is for vehicles. And then for equipment, 170,500. So here I'm going to have 170,500. Okay. So which means now for total accumulated depreciation, I can get the total, which is 317,900 rands if I'm adding all these three. But now for cost, let's go and check the cost price of the equipment. So the cost price of the equipment was 308,000 rands, right? Let's go and see. So are we going to say this is the cost at the end or at the beginning?
Cost at the end.
It would be the cost at the end, né? Because why are we saying that?
Because the new equipment has been recorded.
Exactly. There is an equipment that was purchased and it was already recorded. So which means that would be the cost at the end. So it's going to be how much? 308,000, yeah? But as a cost at the end for equipment, 308,000 rands. Okay. So which means now at the beginning, how much will it be?
308 minus 24,000.
Yes, and how much are we getting?
28,000. 284,000.
284,000. Very good. 284,000. That would be the cost. Okay, so which means now I can get the carrying value for vehicles. I can get the carrying value for the equipment. How much will be the carrying value for vehicles?
$259,600.
259,600, yeah?
Yeah.
Okay, let's see. Okay, I need to say here. 259,600, yes, 259,600 rands. And then how much is the one for the equipment?
113,500.
113,500. 500 rands, 113,500 rands. So that should be an amount. 113,500. Okay, maybe this cost is wrong. How much we said this is 284,000, eh?
Yeah.
I think there's zero that is missing here. Okay, then we're getting 113,500. And then now I need to add all these costs. And then if we add them all, we're going to get how much? 2,421,000, if you add them all. These are the carrying values, okay, and then here we're going to have all the cost price, and then here it's going to be 2,739,500. And then if I take this minus this, I have to get the 2,421,600. These are the carrying values at the beginning. Okay, now going to the end now. How much for vehicles? How much is the cost at the end for vehicles? How much would be the cost at the end? You want me to go to the question now?
Oh, you have to add 117,500 to the cost at the beginning.
So the cost at the beginning, right? Okay, so which means now from these 407,000, must I add it or must I remove it?
Subtract, sorry.
I'm subtracting it now. Okay, so it's going to be 407 minus 117. So we got days it here. We remember this calculation here. So we said 407 minus 117, and then we got 289,500. Yeah? We said 407 minus 117,500. Yeah? Then we got 289,500. That is the cost at the end. Then what about the accumulated depreciation at the end? How much will it be?
147,400 plus.
Yes.
55,175.
Yes.
202,575.
That is the accumulated depreciation, yeah?
Yeah.
How much is it?
202,575.
202,575. Right. Okay. Why are you saying 202,575? How did you get this one? We added these two, right? The accumulated and the depreciation. What about the disposal one? Let's go and check. Accumulated at the end. Let's go and check the formula. What does it say? You remember this formula, ne? What does the formula say? Please read it for me.
Depreciation at the beginning minus accumulated depreciation of asset disposed plus depreciation.
Yes. Did you subtract the one of asset disposed?
I don't think so.
Yes, you did not. That's why you got the 202. 202 is not correct because you only considered accumulated depreciation at the beginning plus depreciation. These are the two that you considered. You only considered one, two. You did not consider an accumulated depreciation that is sitting here. Now you need to go to your asset disposal account and get the accumulated depreciation of the asset disposed. How much is it? 64,625. Can you see this?
Yes.
Yes, so this has to be subtracted because this is the accumulated depreciation of the assets disposed. There is it here as well. We also calculated it there. You can see there's 64,625, there's 64,625. So which means now we also need to say here, we need to say 147,400. Our calculation needs to say 147,400 minus 64, right? We need to say minus 64 first. Minus 64, which is the accumulated depreciation of the asset disposed, minus 64,625, ne? 625, and then we say plus 55,175, ne? Plus 55,175, and then how much are we getting?
137,950.
137,950. That is going to be what? That is going to be our accumulated depreciation at the end. Is going to be 137,950. Yeah? You see that we need to be careful here. We must consider the asset disposed as well. Yeah?
Yeah.
Yes. And then okay, then how much will be the carrying value then? 289,500 minus 137,950.
151,550.
151,550. Let's see. 151,550. Yes, that's correct. That's correct. And then now let's deal with let us deal with the accumulated depreciation at the end for equipment. How much we're going to have here?
$183,850.
183,850. How did we get this one?
Accumulated depreciation at the beginning.
Yes.
Minus 0 plus depreciation.
Exactly, plus depreciation. Then we're getting this amount. Then how much will be our carrying value?
$124,150.
124,150. Yes, that's correct. Very good on that. Then the total will be 2,324,200. Okay, here I needed to get the totals as well. I needed to get the totals here. Then this is our note full and completed. Né? This is our note full and completed. I'm happy that most of the amounts, you the one who got them. I'm just here to guide you more. You can see that, yes, I'm teaching you here and there, but I want to guide you more, Kinelwe, so that you can also work out the answers yourself. Né? So you will never forget. Like, the more you keep on practicing this thing, I don't want to feed you with information, but I'm here to guide you. Né?
Yeah.
Which is going to help you a lot in terms of understanding. Because if I would just say, tell you everything, tell you, you will not be learning by doing that. I need to give you a chance to try and fail if you fail. And then I correct you. I just give you a guide. But I'm happy that most of the things here, you're the one who got these amounts, which makes me happy that one. There is a progress. Okay, so now we can go up and complete our income statement. What is the next transaction now? We're here in number 9. So the next transaction here, what they're saying the loan statement received from Delight Bank on 30 June 2014 reflected the following description: balance on 1 July 562,500, that is the opening balance. Repayments during the financial year, these are the amounts that were paid. Interest capitalized and balance on 30 June, 4,250. That is the closing balance. So what we don't have here is the interest that was capitalized. Then they're saying make provision for the interest on loan. That's what we need to calculate. And then they're saying 150,000 of the loan will be repaid in the next financial year. By saying this, what are they trying to tell us about this 150,000?
They're trying to tell us that that's the repayment without interest.
That's the repayment without interest. Not really, no? Not really that it is the repayment without interest. Yes, I will agree also if you're saying like that, but it's possible that it is the payment without interest. But also what is more important about this amount, they're trying to show that it will be the current portion of loan that will be recorded in the balance sheets, né?
Yeah.
Because current portion of loan is the amount that will be repaid within the next 12 months, right? When they say within the next financial year, 150 will be paid, which means in this balance of 402, included here, there's current portion of loan. So what I will do when I go to my balance sheet, I will say current portion of loan, I will record 150,000 here.
Mm.
Then on the non-current liabilities, what I will do, I will just say 42250 minus 150,000. Now, when I come here, I will say 402,250 minus 150,000. So then I'll be recording the non-current portion only that will be sitting here. But that is something we'll look at when we're doing the balance sheet. But what I want to teach you here, I want us to start using more of like T accounts because they're helping a lot in terms of identifying this, because we're just going to use the amounts that are provided in front of us, and then we are able to get the amount. So as number 5, what I want us to do here, I want us to do a T account for the I want us to do a T account for the loan. Yeah?
Mm.
I want us to do a T account for the loan. So what am I going to do here? I'm just going to say loan. Where is it? This one coming from which bank? This is the loan from. Let's see. It is a loan from Delight Bank. That's what they told us here. It is the loan from Delight Bank. Yes, we received a statement from Delight Bank. So I just gonna say loan here. Say Delight Bank. These are the people we are owing money. So I'm going to have my debit here, and then I'm going to have my credit this side. Okay. Now, I need to have my opening balance because loan is the amount that I'm owing. I'm going to have what? Balance brought down when? On 1 July 2013, right? On 1 July 2013, I'm going to have my balance brought down. So how much will be my balance brought down? My balance brought down will be the amounts that is provided here, 562, 500 rand. So I'm going to record it here, 562, 500 rands. Okay. Then what am I going to have after that? I need to record what? On the same day, this side, okay. There is repayments here during the financial year, which is these are the amounts that were actually paid. So I'm going to say I need to debit the loan account with bank this side, right? Because we made payments. I'll just use the date, which is going to be 30 June 2014, which is the end of the year, end of the year. And then I'll say bank, how much was paid? 229,000 rands. Okay, 229,000 rands. This will be the amount that was paid. And then they gave us the closing balance, which is 402,250. So what am I going to do here? I'm going to say balance. balance carried down. Okay, let me just take it here. Balance carried down, and that is going to be on the 30th of June as well. How much they gave us from the statement? 402,250. Okay, 402,250 rands. Right, and then now I need to get the totals. I need to balance this and get the totals. I know very well that this side, there should be what? Interest expense, né? There should be interest expense here. So now what I need to do, I need to balance my account and see what am I going to get. So the total, this side, if I add the two amounts, 229,000 plus 402, we're getting 631,250. Okay, then which means this side I'm going to have 631,250 as well as the total. And then the difference between the two, this one minus this, I'm going to get what? I'm going to get my interest expense, which is the one that I want to calculate from this question. And then from having this balance carried down, this side will be my 1st of July. This will be my 1st of July 2014, right, which is now the next financial period. I'm going to have what? My balance brought down again, which is going to be 402. 250. This is just a normality account that we usually do, but it helps us in terms of getting this amount, which is very important for us to calculate our interest expense. So our interest expense for the year will be 68,750. That will be recorded here. 68,750, right? And 68,750. But in terms of the workings as well, we can do the workings by saying 229 plus 402 minus 562, 500. 229,000 plus 402, 402,250, and then I say minus the one on the other side, which is 562, 500. So I'll say here 562, 500, and then how much am I getting? Then I'm going to get how much? I will still get the 68,750, which is the same amount that we got on the T account. So this, we can take this as workings on our income statement, because you can't put a T account there. So for my interest expense, you know very well what workings are important on your income statement, né? So it's very important that even if you do something like this, these are the things that you will be doing separately on the other side. Maybe they usually say you can do your workings at the back of your question paper, né? But you need something like this on your income statement, the actual income statement that you're answering, because there are marks for this thing. So it's very important that we show it. Even if you do your T account at the back of the question paper, it's okay for your quick calculation and understanding. Then you take this and put it here. Are you happy how we got the interest, né?
Yeah.
Okay, perfect. We will use more of T accounts in most of the things. Then now, we move on to number 10. Income tax for the financial year ended 30 June 2014 amounted to 76,000 rands. So they're just giving us the income tax amount. So where are we going to record this one? 76,000. It's gonna be here, right? Yeah, 76,000 is what? Is the income tax expense. Okay. Then number 11, the directors declared a final dividend of 35 cents per share on 30 June 2014. This is going to help us more when we do the retained income note, of which we're not going to be doing it now. Note on shares issued, probably this is for share capital also. So let's leave these two transactions. Let's leave them, and then we go and finalize our income statement. Yeah? So for our sales, how much the total that we're going to get there. If you punch the calculator,
$5,177,400.
5,177,400. Yes. What am I doing now? 5,177,400. This is what? This is my sales. Then my cost of sales will still be how much? 3,743,000, né? 743,500. And then how much will be my gross profit?
$1,433,900.
1,433,900. Yes, very good. That is going to be our gross profit. And the rent income, we got the total already. Bad debts recovered, 1,150 will come as it is, 1,150. And then commission income, we don't have commission income here. So I need to remove this one. It was from the previous question format. Then, which means these are the only things we have when it comes to, these are the only things we have when it comes to, these are the only things we have when it comes to, see if this doesn't shift. Okay, it does shift my cells here. Okay, but it's fine. I'll fix that up. So this is what we're going to have. We only have these two as what? We only have these two as our income. So if we're adding the two, how much are we getting as our other operating income?
82,330.
82,330, because we're taking this plus this. It's 82,330. My gross operating income, how much is it?
$1,516,230.
Exactly, 1,516,230. And then when it comes to our expenses, let's see, salaries and wages, 330,000. This has to come as it is, né? There was no transaction that affected salaries and wages. Insurance, we didn't have insurance. I'll remove this. Loss on disposal of vehicle. Telephone, we didn't have telephone. I'll remove that one as well. Packing materials, we got the total. Director's fees, we got the total. Audit fees, 36,900 must come here. And then bad debt, we got the total. Trading stock, we got the total. Sundry expenses, that should be 31,000 must come here. Okay, and then depreciation and then marketing expenses, we have the 240,000 that must come here. And then how much are we going to get as a total of these amounts?
$746,000. and 95.
746,000, ne?
And 95.
I'm getting 1,204,915.
I think I might have missed something.
Yeah, no, it's fine. But if you see the Excel as well, is also giving us, because if I just do the Excel calculator, I'll just say here is equal to sum. Let me just do this and see at all these ones. It gives us 1,204,915. Yeah.
Mm.
Yes, it is giving us this one. Okay, 1,204,915. You'll punch the calculator again when I will send the spreadsheets to you just after this class, and then you will do the calculation again. It's fine. Then my operating profit, how much will it be? My operating profit.
Mm. $311,315.
Yes, very good. 311,315. We're considering the two amounts. 311,315. Then plus interest income, how much would be our profit before interest expense?
331,115.
Exactly, 331,115. That will be our interest before interest expense, profit before interest expense, and then profit before tax. How much will it be?
$262,365.
Yes, very good. 262,365. And then how much is our net profit?
186,365.
186,365. Very good. So this is our income statement, né? From all the workings that we have been doing. How are you feeling about income statement?
I'm feeling better. I've done this other transaction, and I think I'm gonna send it to you, and I couldn't get it.
Which other transaction?
I have to send you the income statement because it's from a past paper.
Okay. Or you were practicing on a question paper, né?
Yeah. So I just need to send you the transaction I couldn't understand.
Yes, you must send it to me. You can send me that question paper, then probably we'll work on it when we meet tomorrow, né?
Okay.
Yeah, because these were just my examples. I don't want us to keep on working on examples, but they are very good in terms of giving us more like complexities for different transactions. But we also need to look at some other ones from the actual question paper just to test ourselves. Then after that, we'll go back and do balance sheet, and then we'll look at other things like cash flow and other things. Everything that you mentioned, we're definitely going to look at it now. But send me that transaction. You can take a picture. You can send me the question paper, the full question paper, and just tell me which transaction that was giving you a problem now.
Okay. I'll send you them.
Okay, thank you, Kinelwe. I will see you tomorrow then. Have a good evening now.
Okay. Thank you. Bye.
Thank you. Bye.